Okay, let's look at what happened today. This is January, I think it's 28th, 2026. Let's have a look at what happened today. This is what we call flash manipulation. This is what we call it. You see this big spike here? You see this spike? If you see that spike, you would think that there was a news article or some sort of something happened, some geopolitical event or something. But no, this is what you call flash. This is classic flash manipulation. You would go to Forex factory, you would look at the news articles, you'll look everywhere, see if there's anything coming up on a calendar. Nothing. You won't see a thing. But this moved 65 points in about 5 seconds. 65 points in about 5 seconds. Now let me explain what happened. Let me explain what is actually happening here. This is a classic liquidity grab, but this is a liquidity grab with a massive vengeance because it grabs liquidity on both sides at the same time. With one candle, it takes out the buyers and the sellers. So if you were buying and you called your mate and said, oh, I was buying, I kind of missed out on the market today. How about you? He would say, I was selling and I missed out on the market today, because this is what happened. Right here, let's see. The market's going down, 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 down. Yeah. People might think that it's going down in confluence with the daily chart. If you look at the daily chart, you will see that the daily chart is kind of on a downward trend. Yeah, just quickly you see that. So let's go to the 5-minute chart again. I've lost it now. Let's have a look. Go to the end. It's right here. If you look at this 5-minute chart here, like I said, it's been going down, right? So people might say, yes, I'm gonna follow that trend because the trend is our friend, right? Now people will put their stops here. Classic. This is human behavior. You'll put your stops up here where there's a peak, right? Some might put their stops here and some might put their stops here. So all this area's got stops, hoping for the price to go down. The price starts going down, they start smiling. Now they leave it like that. However, look what happens here. We run into a bottleneck at the bottom here. See this bottleneck? This here is almost like some sort of resistance. It starts emerging and starts just choking up, right? So now the price goes back up. These guys are praying, but they're not praying too much because the price still is in tune with what they call, look at that. It's just going down. It's still lower highs, isn't it? So it's still going down at this point. It's still going down. So they're there, but they're not really, they're dubious, but they're not completely running out of the market. So now this candle here shoots up in 5 seconds. Literally, it was 5 seconds. 65 points. Zoom. No news, nothing. Takes out these guys. Right? They're gone. That liquidity's gone. Takes out these guys as well. Their liquidity's gone. Now, if people were down here looking at this solid support coming up, and they're saying, yeah, the price is going to go up, they might, well, more or less, they probably put their stops under here. This is the candle. This is our candle. This is the one we would have taken, right? And this must have been a breakout candle, which, if the institutions who manufactured this this liquidity grab, if they saw that, they probably saw that most of the stops are underneath this candle here. So what they done, like I said, the price from here, the price started around this area here, right? And then it rocketed up here, all the way up, taking these guys up, taking these guys out, right? Then the price came back down, came back down, and then it took these guys, the boys that were underneath this area here, who were anticipating a buy, it took them out and then went on its way. That's what it done. And that's a classic both side liquidity flash manipulation grab. It's not, I've seen it a few times, and I think I've benefited about once or twice from it. I luckily have not been on the wrong side of it. But like, for example, just imagine you put a sell in here, somewhere around this area here. I suppose you still would have been all right if you didn't put a stop If you didn't put a stop, you would have been all right. But that's a crazy move if you didn't put a stop. But what I'm trying to say is these guys, they got stopped out. These guys got stopped out. So wherever they put their stops, they're gone. And now the price, the boys that were underneath this area, they're looking back and they're coming back and seeing that they were right about the price. There's no point being right if you don't get any money out of it. I don't care. I'd rather be wrong and get paid. I'd rather be wrong and get paid. The other day, I fat fingered a trade and went to sell instead of buying. I was wrong, but it went my way. So I don't care. It's not about being right or wrong. This game is egotistical. You've got to be careful because that's what gets people into trouble. I've got into trouble so many times when I want to get back my money. If I was in this trade, I probably would have flipping revenge traded. Even though I know I shouldn't revenge trade, I probably may have, I don't know, but I like to stick with the strategy. That's what we're supposed to do. So, as you can see what's happened here, the price has all gone up. So in this situation, what we would have done is just gone in, right? I would have come out on this candle here. A 1-to-1 or a 2-to-1 would have been fine. So it would have went up and I would have taken my money around here somewhere. That's not a problem for me because I don't really follow the trends and try and get the big money because it looks like it works, but sometimes it just doesn't work for me. So I just take the 1-to-1s and just leave. I see the market trend, I get a bit of FOMO, but that's that. And as you can see, so these guys are coming again. Everyone's come in. They said, all right, let's move in, let's do it. And they're moving their stop every time. Look, they move their stop. Here, you see these two candles here. That's an area where people put stops. That's an area here where people put stops, right? This is an area where anywhere you see spikes, that's where people are going to put their stops. They teach you that. You're taught to put it underneath, just underneath the low, put it underneath the new low, underneath the new low. All of those guys have been taken out. They've all got taken out, look, with this candle. One candle took everyone out. It doesn't want anyone to follow them. Most people now would be dubious. They got stopped out here, right? They lost their money. They waited a bit longer and saw it going up again. They went in again and now they're a bit more dubious. So they're putting their stops underneath here and they get stopped out again. So it's not easy. I wouldn't say the market's rigged, but they know where you put your stops and they want your money. That's what they are after. They want to fill orders, buy orders, stop orders, sell limits, buy limits. This is what the market is. If you buy stocks and shares for the long term with a broker, you will put in a price into the broker, online broker, and you'll say, I want to sell these or I want to buy them. Now that order goes into the market and is sitting at the price that you wanted to sell it at. And it gets fulfilled once someone buys at that price. So is either someone else wants it at that price or the market goes to this price and buys it off. It buys your order. It fulfills your order. It gravitates to your price. That's what the market does. It gravitates to your price. So if you're saying, oh, it always comes to me, blah, blah, blah. No, it's because you put an order in. If you put an order, you want it to be fulfilled. It doesn't care whether it's a buy order, a sell order, a stop loss. It doesn't care. It is an order. It doesn't matter to it what order it is. It just wants to fulfill that order. So I hope you've understood this. It's a bit complicated and unfortunately I can't find a way around it. The only way I get out of these kind of things is to not stay in the market too long. That's the only way I do it. Once I put my stop underneath here, I would have it 2 pips or 3 pips underneath this, depending on the spread. I'll put it about 2 or 3 pips underneath my candle, right? And then I'll hope for the best. And if it comes up, if it's shot up like this, I'm just taking it wherever it is. I'll probably take it about here even. Once it takes these people out, depending on how fast I could react. But this is all algorithms. They know exactly what they're doing, you know. And sometimes you literally Literally, when I say take off your eyes from the chart for 2 seconds, and this happens. So it's not an easy game, and that's the way it's just manufactured this way. So I hope you've learned something. If you have, that's great. Put some comments in the comment section. Ask me some questions if you want, and if you've got any ideas how we can like get around this without just jumping out the market quickly. If there's a different way of dealing with flash manipulation, let me know. Until next time.